The market really seeing slow but steady upward progress. So what's your sense of the markets at the moment?
Well, at the moment, there is enough. The supply is not coming in, it's not really forthcoming, but we have a lot of institutional buyers for the blue chip companies, and that's where especially the demand problem comes in. And we think the prices are going to be stable going forward, and after the stocks went ex-dividend, we expect to see new demand for stocks coming in.
With that being the case and overall sentiment being pretty positive around the direction that these markets are set to take, let's take a look at a stock like Centum Investments. I mean, it's traded for the most part softer ahead of its results announcement, but the improved market performance and especially for some of its core listed blue chip companies should be boding well for this company. What are your expectations for results for the year ending March this year, which is set to be released pretty soon?
Well, apart from Centum, there is also Kenya Airways and Safaricom, and we think even Centum is going to be a stock to watch. The stock is up, I think, about 13% year to date. And looking at the nature and the scope of investment, some of their unquoted assets and quoted assets as well have gained value. So it's a stock to watch in line with Kenya Airways and Safaricom, which investors are looking very keenly.
Obviously, when it comes to Centum Investments, there's added news that puts the spotlight on this company, and that surrounds the company seeming to have sold off its stake in the Railways Consortium. We've heard media reports suggest that this has come to the fore. What is some of the news surrounding that development right now?
Well, I don't think the company has come out very clearly on what its position is on the deal, but as they have always said, I think they still want to maintain exposure in private equity deals. They target about a 70% exposure of in their portfolio to private equity and get a favorable return on that. But as when looking at this RVR deal, they are not very clear on whether they are still in the deal, because that will mean participating in the recapitalization exercise to avoid dilution or even sell off their stake. So that's still not very clear.
Well, you mentioned KQ and Safaricom as well. Let's look at Safaricom and your expectations in terms of outlook for this company moving forward, especially given the fact that we've heard this week that we've got Zain now selling its African assets to Bharti Airtel.
Well, with Safaricom, we do expect very strong earnings this year. And considering the fact that Zain has sold off its assets to Bharti Airtel, we think Zain is going to have higher churn rates. And in fact, as at September last year, they had lost 14% of their subscriber base. But all in all, we think the mobile market is going to grow. And more so, being Safaricom being the market leader, we see strong earnings growth this year based on M-Pesa and data revenues.
Well, certainly on a cumulative basis for the 1 month period, we've seen that stock rise 2.8%. In the meantime, it's the agri stocks that really are continuing to trigger lots of excitement. We were talking about Kakuzi yesterday, where we saw just this week an interesting trade on this thinly traded tea and avo company. It's one of the best performing stocks this year, up about 155%. What's your view on Kakuzi?
Well, in general, the agricultural stocks have outperformed the market, and this will be mainly motivated by the fact that agricultural stocks have been undervalued for a long time, especially considering the value of the land which they own. And risk factors are generally going down, and the coming of the rainfall is also supporting the agricultural sector. Now, when it comes to Kakuzi and Ria Vipingo, you find that these are very thinly traded stocks, and where you find supply, most of the time, the buyers have to bid up to where the supply is.
Well, let's look at Ria Vipingo there, because of course it is in the agri space, but it's very different to a tea company like Kakuzi, where Kakuzi has that diversification in terms of a revenue stream coming from avocado as well. How does Ria Vipingo rate among some of the other tea companies who are all at this stage, as you say, on account of better weather, really outperforming?
Well, I think even Ria Vipingo can be held at the same level with the rest of the agricultural stocks. And now with the avocado and the rest of the plantations, I think all in all, it's an agricultural stock and the same factors are in force.